Hello everyone, my name is Shmuel. This is day 55 of my day trading journey. So today I watched two videos on order blocks and internal and external liquidity pretty much. So external is basically the what is it called? Uh, Sell side liquidity and buy side. Like it's basically sell stops and buy stops. So it's the high point and the low point. So right here, if I mark out I think it's on the daily that he did it. It doesn't matter which time frame, you can do it on either, but it just has to be on a higher what is it called, higher what is it called, higher time frame, I guess. It could work on any time frame, but if you go too low, it's most likely going to be invalidated. Like, so right here, this would be our current external. This is the external high right here, and then I think this right here would be internal. It's internal lows. So this would be external. So internal is basically the liquidities like fair value gaps and order blocks and stuff like that. Those are the internal. That's internal liquidity. So right here, as you can see, on the daily, we just hit a fair value gap. Most likely gonna go up. It's just hit internal liquidity, and it's probably gonna go and take external. Right now, as you can see, it is not likely to go and take what is called this external right here. So we're just gonna keep our bias as bullish because right here, it what is it called? It just created this new after taking these, and after it took like liquidity from this, it's most likely gonna go up, take this again, and then keep going up, and it'll keep doing the same thing over and over, and then it's gonna create another internal and another external, and then it's gonna keep hitting it. And so basically, I also learned about fair value gaps. So right here, this would be considered a fair value gap. So no, not a fair value gap, an order block. So an order block is basically what is it called? Uh, a, place in a market where orders pretty much get filled. So right here, and T Trades, he basically mentions it as like the way he finds it is after, or the way he validates it is if it hits what is it called? What is it called? A confluence or something like that, or an important level. It could be anything. It could be a liquidity sweep like this, or it could be a fair value gap. So right here, the order block will start from right here, and if it closes above it, if the what is it called? If price closes above this, what is it called, order block right here, then it's validated, and then you could take a trade using the 50 or the half mark, using it as what is it called? A confluence. So you would enter right here, take this, add up, buy, boom, place stop below this, and target previous highs, like this high right here, all the way to the left, and then target that. That'd be a valid trade right here. So that's the trade I'm gonna try to take. This is on the daily though, so it's gonna be like a very weird trade, but we'll see how it goes. Probably not gonna take a trade on the daily. That's too long. It's gonna take way too much time. Maybe by the end of this week, it's gonna go back up. But my bias for the daily or for GBP is bullish pretty much. I mean, we're already bullish. We broke out just to hit the fair value gap, but we invalidated this little fair value gap right here after we validated it. So second try, close below, hit this fair value gap. If you close above this right here, then the order block is basically what is called validated. So that's basically what I learned. And so I actually before watching that video, I actually didn't know much about about order blocks. Like I just thought they were the move before liquidity was swept. So right here, this could also work as a fair value gap, I guess. As an order block. You see this low right here, it got swept, and a series of down candles would be these right here, as you can see. And I'm gonna just show you an example of it. So basically this, boom, that's the order block. Series of down candles before liquidity is swept or before it hits an important level pretty much. So right here we hit that, we swept this low right here. And so basically we take the game blocks. If you want to enter off of a order block, you basically take it from the body, the high of the body, to the low of this body right here. And so basically the trade, you would take the trade once it gets hit right here. it barely gets hit, and then you would just target previous highs or lows. And uh, he also said, like in the video, he doesn't like to use what is it called? Different, like what is it called? He doesn't like to move his lows like internal internally. He likes to either use swing points or he just doesn't take trades because he doesn't want to ruin, like he doesn't want like RR, his risk to reward, to be changed. He just, like, if he gets stopped out or invalidated because the trade like was still valid, you know. I don't know. That sounded stupid, but that's basically what he said. He'd rather use a stop, put a stop at an external or at what is it called, a swing low or a swing high, because it's like if it gets invalidated, then the trade idea was just wrong. But if it's internal, then like the trade idea was just, it could still be valid, you know. But you just got stopped out because of a wick went down or something. But that's basically it on this video, pretty much. This is what I understood from order blocks and external. And external can also be used. It's just basically drawn. It can be. It's basically used as a drawn liquidity, pretty much. The internal is where liquidity is going currently. External is where it's going currently, and internal is where like it stops a little bit, giving fair value, like these gaps right here, the fair value gaps. That's what it pretty much does, and then it continues going up to take the external. And that's basically it for today. Thanks for listening.